Hi, welcome to the Settlement Channel. Today we'll talk about using ABLE accounts and special need trusts to help people with special needs. Mary Alice Jackson of Mary Alice Jackson PC in Austin, Texas is joining us on the phone. She's a Special Needs Alliance board member. The Special Needs Alliance is a national organization comprised of attorneys committed to helping individuals with disabilities, their families, and the professionals who serve them. Mary Alice, let's start off by going over the Social Security Code and the Internal Revenue Code. Can you tell us what they are and how they can be in conflict?
The Social Security Act governs all Social Security programs, including supplemental security income. And that's an income program for individuals who have either not worked in their lifetime or not worked a sufficient amount of hours in order to have a disability benefit through Social Security. And it also provides people with disabilities with monthly income when they have earned enough and paid into the system a sufficient amount in order to take a monthly benefit. Where the Social Security Act and the Internal Revenue Code come into conflict is when an individual who has a disability and is receiving a supplemental security income, or SSI, needs to qualify for a public benefit program, because public benefit programs have very narrow rules, and public benefits largely are included Medicaid and SSI, as well as Medicare in some instances. But Medicaid and supplemental security income are the two programs that are the most common means tested. So you have to have a certain amount of assets in order to qualify, or be below a certain amount of assets. Well, let's say that the asset limit is $2,000, which is a common asset limit for a Medicaid or SSI program. But the individual has $50,000. So they're $48,000 over the asset limit, and the first thing that occurs to most people is, well, I'll give away $48,000. And that will be okay, because in the Internal Revenue Code, I'm allowed to make gifts of $14,000 a year to as many people that I would like to do so. And I can think of 4 or 5 people I'd like to give money to. That comes in direct conflict with the Social Security Act, because although the Internal Revenue Code is happy for you to give away money as part of its tax gift program exclusion, meaning that if you give away $14,000 or less, you don't have to file a tax return. From Medicaid's perspective, you can't give away any money without reporting it and suffering a penalty. So it's very, very common for clients to come in and say, well, I can divest myself of these monies and qualify for Medicaid by just giving it away because I know about this $14,000 limit. And it's painfully surprising for them to find out that that's not the case. So that's the first real interchange and difficulty between the two programs. You learn very quickly that government programs are pretty much in silos in terms of their own eligibility criteria, whether it's Social Security or the IRS, Housing Code, the Veterans Administration. Everybody's got a different rule. It makes it very complex to understand.
I believe there are a couple of ways to avoid that conflict, using a special needs trust or an ABLE account. Can you tell me what a special needs trust is?
Sure. And it's really important to understand the nature of a special needs trust and how it fits into this scenario, because then it's easier to understand the ABLE Act. When an individual with a disability has more than the $2,000 resource allowance, then a trust instrument or a trust document, which is just a contract, can be put in place, and it's known as a special needs trust. And every dollar over $2,000 can be placed into a special needs trust. And under the federal laws and traditional trust law, the money in those trusts are not counted towards the $2,000. which sounds like and is a great thing on the face of it. The problem with the special needs trust is that the beneficiary, whether competent or not competent, loses all control over the money during the lifetime of the trust, as long as it's funded. They can't demand a distribution, they can't require a distribution, and the trustee has no obligation to give a distribution. So, as you might imagine, there are divergences of opinions oftentimes between beneficiaries and trustees as to what the best course of action is. And that's it can create hard feelings, but most of all, it creates a feeling of a lack of power and control in the individual with a disability. So that's the purpose of a special needs trust, is that any monies that are deposited into these trusts are not counted by the Social Security Administration, so that you could literally have $200,000 in a special needs trust and still qualify for Medicaid. Now, there are people who find that difficult to understand and think that that's taking advantage of the system. Well, in reality, the public benefit programs, Medicaid, SSI, they provide the most basic of income and medical needs. And many people with disabilities, what they need are supports and services. You need someone to come into your house and help you get dressed in the morning, or to fix a meal for you, to make sure that you don't fall. You need programs, therapy programs, in order to make yourself stronger and more independent. You need respite because your caregiver is too tired. So there are a tremendous number of those kinds of programs, but they're only provided under Medicaid. They're not services that you can buy in the private marketplace very commonly. And if you do buy them in the marketplace, you're going to pay an extremely high set of fees in order to do that. Private services, let's say you have 8 hours a day of care that's allotted to you, and that can cost anywhere from $40,000 to $60,000 a year, depending upon the nature of what you need. So even though you may have this $200,000 in this trust, that money is there to pay for what the public benefits can't. And in most cases, it's going to keep your individual with a disability stronger, healthier, and less likely to need more services in the future.
What about an ABLE account?
So we've talked about the fact that there is a lack of control and, in a lot of ways, a sense of independence for beneficiaries of special needs trusts. And a number of years ago, a group of people in this disability community started lobbying Congress for something that was a little bit more simple, where you didn't have to necessarily undergo the expense and the control of a special needs trust, and would allow individuals to either manage their own money, individuals with disabilities, or to have a parent or agent under a power of attorney manage the money for them without a lot of reporting requirements. And after several years of negotiations, what came out is what's known as the Achieving a Better Life Experience, or the ABLE Act. Now, the key provisions of the ABLE Act are that, number one, it is found in the Internal Revenue Code. It's not in the Social Security Administration laws or regulations. The reason for that is that the most attractive part of an ABLE account from a political standpoint was to allow individuals to deposit funds into an account very similar to an account where you may deposit funds for education, your state education programs or other accounts. Those are known as 529 accounts for the section of the Internal Revenue Code. So ABLE accounts came under and are now known as 529A accounts. And that means several things. That means that ABLE accounts are not subject to income tax for the growth on the money in the account. They're not subject to income being reported to the beneficiary upon distribution unless the funds are not used for what's known as qualified disability expenses. And as I mentioned before, the funds can be used and controlled by the individual, by the parent, or by someone who's been named as an agent under a power of attorney. So there's a lot higher level of control there. There are a couple of really important parts about ABLE, in addition to those tax qualifications. ABLE accounts, individuals can only have one, and they're limited to individuals whose disability began before the age of 26. There's some movement in Congress to raise that age, but at this moment, 26 is the maximum. One account, and the maximum that can be placed in the account in any given year right now is $14,000. And I keep referring to that number because it is the amount that you can give away to an individual in a year and not have to file a tax return, known as the annual exclusion amount. So Congress tied the amount you can put into an ABLE account to that annual exclusion, and it can go up and will go up in subsequent years. So we have one account. You can have as many donors to the account as you would like, but no more than $14,000 aggregate in a year. Now, over time, the account itself can accumulate as much money as your state allows to be accumulated in an education account, a 529 account. And that varies by state. For instance, in Texas, the maximum amount that can be contributed to an education account is $370,000. In Pennsylvania, it's a bit over $400,000. So depending upon which ABLE program you decide to join, there may be opportunities to put more or less money in. These accounts are operated by the comptrollers generally, or the state agencies that run the state education plans. And so you don't go down to the bank and open the account. What you do is you go online, you enroll with the state program, and then you ask for money, and they give you money back. This is very unusual for the Social Security Administration because it requires a level of oversight that I think over time they're going to have to work out the rules on how you're going to oversee whether or not the monies were spent on qualified disability expenses. Now, those expenses are pretty broad, and they include things like health that's not provided under a Medicaid program, education funding, housing, which is always a key, transportation, legal fees, support services, assisted technology, personal support. Those are very common qualified disability expenses. I had a conversation with a colleague just a week or so ago about whether or not a vacation for an individual qualifies under the category of wellness. And there's nothing under the current IRS definition of qualified disability expenses that permits travel. So there is an interpretation that needs to be made about whether travel is actually one of those expenses. Now, most people aren't going to use lawyers for ABLE accounts, except perhaps to get them set up. And the only downside to that is that you're not going to be able to get perhaps advice on whether or not a particular expense is going to be accepted or not. On the other hand, the IRS has a very broad category at the end of qualified disability expenses that basically says, or anything else that the IRS thinks is okay. So special needs attorneys are oftentimes very hesitant to give a client a thumbs up on how to spend money that's not definitively in the regulations or the law, because oftentimes those are expenses that are denied and can cost some eligibility for the individual for a period of time. But how these programs are going to be managed remains to be seen. One other important factor in an ABLE account is that if your ABLE account, the balance exceeds $100,000 and you are a recipient of Supplemental Security Income Funds, which provide you with income right now of about $735 a month, that SSI benefit will be suspended as long as you have more than $100,000 in an ABLE account. When the balance falls back below $100,000, you'll begin getting those payments, the monthly SSI payments again. That does not affect Medicaid. You'll always receive the Medicaid, but there is a suspension of the SSI benefit. And finally, I think in describing an ABLE account and its pros and cons, the thing to understand, going back to our discussion on special needs trusts, there are two types generally of special needs trusts. The first is what we refer to as a first-party trust. And that means that if I become disabled right now and I have $200,000 in an investment account, but I need Medicaid services, then I can move my $200,000 into a special needs trust, which is great. But because it's my money and I'm incurring a debt to Medicaid, upon my death, Medicaid has a right to assert a lien against those funds and to be paid back for anything or for all amounts during my lifetime that Medicaid has expended upon my behalf. The second kind of trust is a third-party trust, and that means that other people's money, not my own, has been used to fund the trust. And in that case, the third-party people who put money in, the Medicaid costs are not their debt, so they name beneficiaries outside of having to worry about a Medicaid claim. There is no Medicaid claim on a third-party trust. An issue with ABLE is that irrespective of who puts the money in the account at the time of death is subject to Medicaid payback. So, and this is one of the more difficult negotiating points with Congress when the bill was being passed, but we weren't able to resolve that at this time. So people do need to understand that irrespective of who puts the money in, at the time of death, there are funds remaining, Medicaid gets the first shot at being paid back. But there's no question that there are definitely IRS advantages and tax advantages to having this account, and that the ability of an ABLE account to give a sense of autonomy to an individual with a disability is priceless in a lot of ways. If people have far more money that they need to manage, then a special needs trust is really the first thing to look at. But it is possible to have both a special needs trust and an ABLE account. Those of us who do special needs work, as the majority of our practice, have learned that trusts, ABLE accounts, spending on things that are exempt, such as a house or an automobile, there are lots and lots of tools in a special needs toolbox. And ABLE has brought us something new in order to discuss with clients and to give clients another choice about their lifetime planning.
Thanks for talking to us today, Mary Alice.
Thank you.
And thank you for watching the Settlement Channel.